Well, good morning. Yes, it's me, Kenny Polcari. Today is Wednesday, July 17th, 2024, and here I am. I'm actually back in North Palm Beach. You can see the weather is just absolutely gorgeous here. The sun behind me, the clouds up there in the sky is a blue sky with kind of floating, beautiful white clouds. It is an absolutely beautiful day here. Right now, it's about 8:15 in the morning, and it's about 90 degrees and just gorgeous. So let's get going, because here are the things that you need to know, right? The big rotation is beginning. We're starting to see money move out of tech and into the value and the SMID trade, right? Retail sales yesterday came out stronger. Or is that just ongoing higher prices? We could talk about that. Earnings, they do, though, continue to surprise. Many companies surprising to the upside across all metrics, and forward guidance is good. Bonds rally, oil is down, and gold remains higher. And what do we have for dinner tonight? Well, it's a side salad. It's a summer orzo spinach salad. It is perfect, right? So, and the party just won't stop, although today could be the start of something different, but we'll see how the day gets started, which is exactly why I tell you that you need to remain on the top of your game, right? Don't get lulled into complacency. Investors and traders and algos just can't seem to get enough. The Dow Jones Industrials yesterday adding 743 points. The S&P up 36. The NASDAQ, while up, was the underperformer, just rose 37 points. New money continues to rush into the Russell, right? The small and mid caps, pushing that index up 77 points, or 3.8%. While the transports added 517 points, or 3.3%, and the equal weighted S&P advanced by 120 points, or 1.7%. Retail sales show that the consumer appears to be just fine, right? Top line month-over-month sales coming in at 0%, right? But it doesn't sound like much, but when the expectation was down 0.3, that's a win, right? Ex-autos and gas came in at up 0.8%, when the street was expecting up 0.2%. And both readings from last month were also revised upward as well. My question, though, continues to be, is the consumer spending money because they're confident about the future and about the economy, or are they spending more money just because prices continue to rise? Because that is a real concern. Last night, on my way home, I went to Publix, right, the grocery store in North Palm Beach. I paid $10.29 for 1 dozen eggs. In fact, I paid $100 for I'm not even sure what. I bought a quart of milk. I bought a pint of half and half. I bought 4 bananas and 3 peaches. I bought a package of cheddar cheese. I bought a package of Thomas's English muffins. I bought a 12-ounce package of Dunkin' Donuts Original Blend coffee. I bought Bisquick pancake mix because I love pancakes, and an 8-ounce bottle of maple syrup, and the bill was $100. I mean, $100. I looked at it and I thought, the hell did I spend $100 on? I didn't buy any meat. I didn't buy any vegetables. I didn't buy any paper products or detergents. I didn't even buy flowers for my wife, right? And that, by the way, was just for me and my wife. I don't have a house full of kids. I mean, I'm just saying, prices are not coming down on the things that we need every day. And look, I didn't even get into utility costs, insurance costs, and gas for your car, right, which continue to rise. Earnings, though, continue to surprise, right, on the upside. UNH rising 6.5% yesterday. They reported better than expected numbers and remained bullish on their forward guidance. Bank of America also surprised the upside, rising 5.3% after reporting better numbers and suggesting that their net interest income is going to improve in the months ahead. Morgan Stanley gained 0.9% after posting a 41% rise in year-over-year profit. So it's all good. Now, the SMIDs, the small and the mid caps, continue to charge higher. The IWM ETF, which is a small and mid cap ETF, rose by 3.4% yesterday. It's now up 12.5% year to date. Recall that this ETF was down nearly 7% at the end of April. It's rallied to unchanged by early July, and now it has gone up 10% since July 10th. Value also continues to move into the desired space. The SPYV up 1.5% for the day and is now up 8.8% year to date. All while some parts of the tech sector are in retreat, which should be no surprise to anybody. The semis, the SOX index down 4.7% over the past week. But before you go complaining, that ETF is up 36% year to date. Nvidia, that's given back 7.2% in the last 3 days, causing some analysts to call for the death of that sector, which I think is absolutely ridiculous. Again, Nvidia is up 155% year to date, and if you take in last year's performance, it's up 770%. So you're really going to have a nervous breakdown over a stock that's down 7.2%? Look, I guess it depends on when you get in, right? But in either case, tech is not going away, and Nvidia, along with others, is not a group that I'd be selling just ad hoc, right? But then you have to look what some asset managers are doing, right? They're taking advantage of the gains while other asset managers are taking advantage of the pullback. Bloomberg, for instance, shows that as of March 31st, both Fidelity and State Street were combined sold 35 million shares during the first quarter, yet still owned 2 billion shares of Nvidia, while Vanguard and BlackRock each bought about 110 million shares, right? Bringing their total to over 4 billion shares of Nvidia. So you ask, why is Vanguard and BlackRock a buyer versus Fidelity and State Street are sellers? Well, for the same reason that you're a buyer or you're a seller. They have a view. They have risk to manage, the same way you have risk to manage, right? It's not any more complicated than that. And remember, don't create a portfolio just based around election year rhetoric, because that's also what's going on, right? There's people changing kind of views based on what they're hearing in the rhetoric, and you should never do that. As long as you're properly diversified and you're not overweight in any one of the sectors, and you know what you own and why you own it, then don't stress. Nvidia down 7% is not a disaster. Look, we could see Nvidia go down another 8% before it even hits trendline support at $114.50. And that still is not a reason to panic, unless, of course, you're the panicky type, right? The ultimate question is, has the story changed? Is the reason that you bought it still intact? If not, then you need to revisit it. If it is, then don't overthink it, right? You might even consider buying more on a pullback, right? The stock down 10 or 15%. Not necessarily the worst thing to do. Now, this morning tech is under pressure, right? Nvidia is quoted down another 3% in the pre-market. In my view, it's because that's what the cable news business shows want to discuss, right? They discussed it on the way up, and now they want to discuss it on the way down, right? The thing to remember, though, is that stocks take the stairs when they go up, and they take the elevator when they go down. Moves down are always more dramatic. And like the moves up, they are created by fear, right? On the way up, it's the fear of missing out. On the way down, it's the fear of losing money or fear of losing value. But remember, you only lose it if you actually take the loss, if you sell the stock. Riding the waves is not losing money, right? Now it's time to move on, because you kind of know that, you understand that. Bonds rallied as demand for treasuries continues to rise, which is a bit curious to me, right? The Congressional Budget Office came out yesterday and said that they expect that that fiscal 2024 budget is now going to reach $1.9 trillion. This is up from their prior estimate of $1.5 trillion, which means that Janet is going to have to bring more supply to the markets. And more supply usually means lower prices, lower bond prices, and higher yields, something that we haven't seen yet. Remember, U.S. Treasuries are basically no risk, right? As long as you hold them till maturity. If you buy them and you lock in a 4.5% rate, then that's what you get at maturity. Anything more or less is going to depend on what happens in the market in between, and if you make a decision to sell or buy more, right? The TLT, the TLH, and the AGG all rallied yesterday, rising 1.4%, 1% and 0.4% respectively. The 2 years now yielding 4.45%, and the 10 years now yielding 4.17%, down significantly from where those yields were just weeks ago. Oil fell yesterday, testing as low as $80.22 a barrel. Again, they were pushing that weakening China story. Analysts citing that the Chinese economy only grew by 4.7% in the second quarter, noting that that was the slowest growth rate since the first quarter of 2023. But on the other side of this argument, U.S. crude inventories fell by 4.4 million barrels last week, suggesting that U.S. demand remains strong. All while geopolitical risks continue in the Red Sea, and they're suddenly heating up again, right? Oil remains in the $80 to $85 trading range for now. Both the short-term and intermediate-term trendline supports are at $79.44 and $79.15. So there should be, if it backs off, there should be some level of support. Gold continues to turn in the upper 2400s. This morning it's up $11 at $24.78 as traders continue to bet on the September rate cut in the beginning of a Fed pivot, right? Remember, lower rates will cause the dollar to fall and then be supportive for gold and other commodity prices. For now, I think gold remains in the 2400, 2500 trading range. Eco data today includes mortgage apps, building permits, housing starts, industrial production, and capacity utilization. Earnings include names like Synchrony Financial, Johnson & Johnson, Citizens Financial, Financial, all which reported earlier this morning and all which beat. We're also going to hear from U.S. Bank, Prologis, Alcoa, and United Airlines later today. U.S. futures this morning are lower. Wow, imagine that. Dow futures down 75, S&P's down 40. The NASDAQ lower by 250 points. Yes, 250 points or 1.2%, while the Russell's down only 3 points. Recall the tech sector is up 33% year to date. Semis are up 36%. Communications also kind of techy, up 25%. So if there's a bit of a rotation out of the outperformers, you should not be surprised at all. Again, you have to ask, has the fundamental story changed? 7 of the 11 S&P sectors are up double digits. Financials up 15%, industrials up 12%, consumer discretionary up 11%, utilities up 10%, energy up 10.25%. The other 5 sectors are high up in the high single digits, 8 and 9%, except real estate, which is only up 1.2% year to date, and that's a direct rate issue, right? As discussed, we are entering what could be a volatile summer period. Thinking all the election rhetoric, and then we're entering the seasonally weak time of year from August through October, so brace yourself for volatility. The VIX index is kissing resistance at 1412. A spike up and through that is going to see a decline in stocks. But before you go and sell your stocks, consider buying some insurance, right? Playing the contra trades can help blunt any move lower in your longer term portfolio. Consider the DOG, the PSQ, the SH, even the VIXY, VIXY. These ETFs allow you to benefit if the market drops, offsetting any losses you're going to see on your core portfolio. Unlike your Apple, your Amazon, your JP Morgan, or your Nvidia, these ETFs are meant to be strategic. They're not long-term names. You use them when and if you think the market is headed lower. You can also use leveraged ETFs, but be very, very careful and be sure you understand the risks associated with those. They cut both ways. And the key word here is leverage, right? And if you're on the wrong side, the cuts can be very, very deep. I'm just saying, talk to your advisor. The S&P closed at 5667 yesterday, up 36 points. The tone is negative this morning. The cable channel's turning the tide on the tech trade, which only makes it worse, right? Earnings will continue to make the headlines, but it's also going to be about the election rhetoric as the RNC is about to complete their convention in Milwaukee tonight and tomorrow. Tonight, the highlight is J.D. Vance, and tomorrow it's going to be Donald J. Trump, right? The weekend shooting, now really nothing but a distant memory for the far left, as JoJo has ramped up the language once again on his visit to the NAACP yesterday, right? As they prepare, also as the Democrats prepare for their convention in August. The jury is still out on who's going to headline the Democratic ticket, so stay tuned. Okay, so what do we have for dinner tonight? Again, this is not a dinner, it's a side dish. You can have it for lunch, you can have it for dinner. It really goes with anything. It's simple to make. It's something in the summer that's almost a staple in the refrigerator, right? It's a summer orzo salad. You eat it cold, it's delicious. It's a great dish to serve at a barbecue, or even better yet, just to have in the fridge, right? It's simple to make, should take you no longer than 12 to 15 minutes. So for this, you need a pound of orzo pasta, right? It's a little pasta, almost looks like rice, but it's a little bit bigger. You need garlic, olive oil, fresh spinach, ricotta salata, which is a hard cheese, and some salt and pepper, right? Now, you can substitute the spinach for arugula if you prefer, but I always use spinach in this. You want to bring a pot of salt and water to a boil. You're going to add in the orzo. You're going to let it cook until it's al dente, maybe 6 to 8 minutes, right? Taste it, just make sure you don't overdo it. While that is cooking, you're going to heat up some olive oil in a pan, saute the garlic, just allowing the oil to take on the garlic flavor. Don't burn it. Now you're going to remove it from the heat and you're going to just set it aside. You're going to cut the ricotta salata cheese into small bite-sized cubes and you're going to set that aside. When the orzo is done cooking, you're going to strain it. Remember, always keeping a mug full of the pasta water just to re-moisten it a bit. Put the orzo back in the pot, add a little bit of the pasta water and mix it just so that it's moist, not soaking wet, just moist. Don't let it puddle, right? Remember, never let it puddle. Now you're going to toss in the fresh, uncooked spinach, right? Just put them in, or the arugula, whatever you use. You're going to add in the oil and the garlic. You're going to mix it to coat it really well, right? You want it just enough oil on the pasta just to coat it. You don't want it bathing in oil, so be careful how much oil you use. Now add in the ricotta salata and mix it again. Put it in a bowl and then refrigerate it. This is done. right? It just needs to get chilled now, right? It's a perfect side dish for, like I said, for any summer barbecue, and it's even good if you just feel like eating it right out of the bowl, one way or the other. It's a great dish and something you should always have in your fridge during the summer anyway. In any event, it is a gorgeous day here. It's relatively calm. You can see the water behind me is relatively calm, but we'll see what happens in the markets as tech, I said, remains under pressure. Until tomorrow, take good care.